Morning, guys. My name is Likit Sagar, and welcome back to Gas Diary. So, in this video, we talk about US gas weekly review for the week which started last Monday, which was 25th of May. Please note that this content is informational and for educational purposes only. I'm sharing my personal execution and trading strategies from past week just so that you get familiarized with the concepts. I do not offer financial advice, trade recommendations, or future market outlooks. Commodity trading comes with high level of risk, so please do your homework and due diligence before taking any trades. Uh, that's that's with regards to the disclaimer. Coming back to the markets last week, I would like to split the discussion into three parts. First 5 minutes I will be talking about fundamentals. Next 5 minutes I will be talking about charts, technical analysis, and then the last 5 minutes I'll be talking about my strategies, what I did, what went well, what went wrong, and what are the learnings. Okay, coming back to the fundamentals. So yeah, I don't have a chart for fundamentals, which is production, but last week there was a drop in production midweek. On one day it fell to 108 BCF per day in the US, so which is below recent heights of above 110 BCF per day. So that has acted as a slight bullish driver. Coming to the second uh, fundamental, which is the weather. So I would like to show you two charts where we speak about weather charts. So this one is the weather charts forecasted last Monday, and I would like to show you how it is they are currently, and probably you will get an idea how the weather charts have changed. So if you look at the weather chart itself, so this was the week last week, which started May 25 and ended and will be ending today, so 31st of May. So next week will be 1st June and ending 8th June. So if you look at the chart itself, so last week it was forecasted to be below seasonal temperatures across the east coast, west coast, and Texas, and then Midwest as well. So this probably is a significant bearish signal for heating demand. Uh, so coming to this week forecast, this is this week's forecast, which was done last Monday. So if you look at here, so there is some heat generating on the West California region, so that's there. And then however the Texas region and the east, they are below seasonal averages, so that should keep the demand for gas for power subdued. So probably this is again neutral to slightly bearish. But however, if you look at how charts are developed today, so last week is done, so this is again I would like to take a look at this chart. So 1st June to 8th June, this chart, compare it with this chart. As you can see, most of the below seasonal averages across the Texas are gone now, and then there is there is a heat looming up. So that's again a significant development over the week. And then if you look at the other medium term charts as well, like from 8th of June to probably end of June. So there is some cold over here, around Florida region, cold over here, and then it's around normal near Texas and Florida. Some heat building by the start of July. But if you look at the latest chart, there is around normal over here, but with this, when you compare it with this below seasonal temperature, so it's totally normal, it's not below seasonal. And then if you look at the other charts, the temperatures are seen to be rising, so above seasonal averages. So the development last week is that temperatures are revised upwards, which would probably increase the demand for gas for power consumption in the US. So that has been the major signal last week. Coming to the LNG demand, so LNG demand probably was was around sideways around 17 BCF per day. However, on Friday there was an announcement that Seven Pass will be going offline, and then there are couple of maintenance announced, which are the pipelines which go to Sabine Pass. So that was on Friday, but probably it should be short. Probably the capacity should come online by Tuesday this week, the coming week, Monday, Tuesday, next Tuesday. Coming to geopolitical drivers, the gas has been sorry, the Brent crude has been bearish, so that again means markets are optimistic that a deal is soon between US and Iran. Coming to the gas rigs, this one probably I would like to show you. I would like to take you through the US rig gas rig counts. This you can see. So this was probably for last week. This was a week before as well, so that would be the starting point for last week. So if you see, rigs were down by 3 for the week, which ended 22nd of May, and so that was supposed to be a bullish signal for prices because gas rigs are going down. So that's another fundamental driver. So that's with regards to the fundamentals. Now coming back to technicals, guys. Technical analysis charts. So by the end of by the start of the week, Monday, prices were bearish. Prices tried to go higher, but then selling pressure has come. So probably this is again because there was significant selling pressure over here, and markets after this significant bearish price action, probably markets probably would think prices would go lower, but here probably markets were reacting to the change in price, change in the forecast, changing in the forecast for the couple of days, and then probably they stayed where they are. But there was price action which happened slightly bullishly, I would say, because of this long upper shadow of the upper shadow in the candlesticks. However, by Wednesday, markets went higher. Also, I would like to note that so this one is looking forward month ahead contract, so which switched it to June, which switched from June to July. So we are trading July now, so which is at a premium to the May contract. So there is something over there, so that's why this price jumped over here. So which is around 3. So immediately after that, price tried to fall, but this has been a good support, and then prices went higher, and by Thursday prices were trading already higher, testing this level seen $3.150 around that. And then the report has come of weekly storage report has come around 92 BCF, which is probably below the market expectation of mid 90s, so which is around 95. And then market shot up around another maybe 50% of the day of the move. So market shot up maybe 3% before the news, and then 3% after the news, and then on Thursday, by the end of the day, markets were up 6% on Thursday. And then on Friday, markets tried to go higher, but then they have they have given up most of the gains, and probably they ended up where they were. So that's with regards to the technical charts. Then probably this is another chart where I would like to show. I have drawn this parallel channel, and then there is a wedge as well. Probably this is what I was showing you last week, in the last weekly chart. So this rising wedges are usually bearish. However, on Wednesday, this was this once this line is taken decisively, probably that wedge wouldn't hold, and then markets try to go higher, and then there is this parallel bearish channels I have plotted. These are significant as well because they are there for long. So this channel is broken. So then on Thursday, once that report has come, this channel has been decisively broken, and now we are into this higher band higher band region. So that's the development on technical analysis charts. Okay, then maybe we have other indicators as well, like the Bollinger Bands, which has been crossed again. That again shows that momentum is picking up. And I also would like to tell you that this is a proper uptrend, I would say. Like most of the people may not insist on looking at how the price movements happen, but if you look at the price movements from 13th May to 19th May, the price went higher. Probably like it took 5 days to go higher, but they have come down within a span of 3 days. But then again, when we tried to go higher, probably it didn't take much. It was in a matter of 2 days, prices went and taken this last high decisively and went higher. So that's what the typical uptrend means. So that's with regards to the technical analysis. So coming to how I traded last week. So after this bearish price action, and then once I made money the week before last week, I was still bearish. So probably because I was checking the weather patterns over the weekend before the start of last week. So the weather patterns were sideways to slightly bearish. There was not much developments, and then once the trading started on Monday last week, so this is where I take positions. Uh, so on Monday last week, once they opened, probably I have taken position somewhere at the opening, and then what happened is that probably uh, 2 days of sideways action with some slight bullish pressure, but I was still hoping that this line would hold. But however, on Wednesday itself, prices have crossed, and I was still hoping that prices would hold this level. Yeah, but then again, what happened was that on Thursday, that's the news. And then prices went higher, and however, maybe I'll walk you through what's my feeling was. Probably first couple of days itself, I should have closed my positions, but then I believe I struggle from this issue. Probably everyone struggles from something or the other, but when it comes to me, I believe I struggle closing a position, whether it's in profit or loss. uh, it probably it takes a bit of time to close a position, uh, but so but it helps when letting the profits run, but it doesn't help when cutting the losses short. So you let the profits run, because I wouldn't close my position. Profits keep adding up, but when it comes to losses, you need to cut your losses short. You need to when you see loss, you should ideally cut it, but that wasn't the case with me. I let the losses run as well, but that's my psychological issue I am working on. Yeah, probably I need to develop on that, but there is some good news as well, because after the Thursday's price action, I closed my positions. Once I have seen that significant price candle upward 6% on the natural gas, so I closed my short positions, which is a good news. And I closed my short positions. I went long. Probably markets went higher, but then again they have come back. So that again is probably because of profit booking, maybe. And then there were reports as well, like I mentioned, a Sabine Pass going for maintenance, brief maintenance, but significant maintenance over the weekend and probably till Tuesday. So that is a significant one. So probably markets, probably they didn't want to carry the risk as well, whether patterns can change. So that's why they didn't want to carry that risk. Anyways, probably I'm still working on it, like how to develop my analysis further. So I have built this Excel file where I would like to put my thoughts uh, on different parameters. I would like to rate them, and then each of them would give me a score. So if you look at the score, this comes from the sum of different parameters I use. So there is production, and there is gas demand in the US, and then there is LNG demand, which the US exports to other countries, and then there is other data as well, like the inventories, which again come from the demand, but they again are the market movers. because sometimes they are the reality check kind of thing. So that again is there. Then there is geopolitical risk, which probably some bullish or bearish sentiment coming from the geopolitical issues going on around the world. And then there is technical analysis. Probably from this you can see that I have given just everything goes from -1 to 1, but if you look at, there is 6 points, of which just 1 point is for technical analysis, 1 point is for geopolitical risk, and maybe other data as well. There is in other data I have given some news as well, like future maintenances and all. But yeah, sorry, in other data I have given number of gas rigs inventory changes. So that's there. So however, if you look at it, I would rate 4 points out of 6 to the fundamentals, and then probably there's 2 of them to the speculation. I have my analysis for next week as well, but so I over the weekend what I have seen is that production remained almost flat, maybe slightly down. Today again I have seen a report which showed a bit low production, which is why I have given zero point 0.5, but over the weekend it has picked up to 110, so that is why I did not give 1, it's 0 0.5. And then if you look at the lower 48 demand, from Friday again the forecasts were for Friday evening forecasts were revised downwards, but from Friday morning to today, it's again up 1 degree. Cooling degree days are up in the GFS, which is a based US based forecast, and EC is European based, which is again for the US. So they are significantly up 6.4 days related to Friday. So if you look at Friday, from Friday as well, they were up 5.5 days, and then probably today as well again they're up 6.4 days, similar with GFS. Friday as well they were up 3.9 day, and then today again they're up 1 day. So if this is not probably accounted, that's what I feel. And I'm yet to update this 46-day forecast, but yeah, so I have given 0.75 for demand, which is out of 1, and then there is LNG demand, which is probably sideways. There was some bearish price action happening on Friday. I accounted that for the Sabine LNG maintenances, Sabine Pass LNG maintenances, so that was accounted on Friday, so I did not give anything over the weekend. Other data, so the gas rigs were flat at 125, so I did not give much any rating to that. And geopolitical risk I added 0.25. Geopolitical risk I added 0.25. That is again because US Iran negotiations are not going well, and US disabled a flagged ship, Gambian flagged ship, which was headed to Iran port. So there seems to be some escalation, which is why I gave 0.25. And there is technical analysis where I have technical analysis where I still feel that there is still some momentum going on, and then prices are still above the upper price channel, which I have showed in the charts. Upper price channel, so this is the price channel. Once the prices have crossed the upper trend line in the channel, momentum ideally would build up. So that's why that's the bullish case. And then still holding above Bollinger Band and Thursday's close. So it's Thursday's close and still above the Thursday's close and above the Bollinger Band, which ideally would mean prices could go further high. But there is bearish one as well. Like if you look at the shooting star on Friday, that's bearish. However, I feel it needs confirmation. So this one is a shooting star which happened on a good volume as well. So probably if prices crash from this level, because these people wouldn't want to hold losses, that would build momentum and prices could fall further low. So that's there. So that is a caution. So overall, I give 0.25 because they are still above Thursday's levels, above higher Bollinger Band, and then above upper parallel channel. So that's the rating. So overall I have arrived at 1.75, which is greater than Friday's. So probably I am expecting the prices to continue to go higher, at least on Monday, and then probably I started this one, so I'll work around, and then I should let you know how the market movements happen. Thank you for watching this video. Thanks very much.